Hello friends, how are you all doing? So today's session I am going to be discussing with you about how to determine the share of profit or loss of a deceased partner. I have divided this particular topic into two sessions. In today's session we'll be learning about the different bases that can be adopted to determine the share of profit or loss. In the part 2 we will be discussing about the situation where the profit sharing ratio amongst the continuing partner, if it does not change and if it changes, how the accounting entries which is going to be passed by you would change. So let's concentrate on today's topic of ascertaining of the share of profit or loss of a deceased partner. Now, when we're talking about the situation, here there is a deceased partner, means a partner has died. Now, in this case, it is little different. All other accounting treatment in case of death of partner is very similar to that of retirement of partner. Only thing that we find is quite different is that retirement can be planned, whereas death is totally uncertain. So death can happen on any day of the year. So when there is retirement, a partner wants to retire, he can retire on the beginning of the year or at the end of the year, and that way the computation and accounting treatments of several items are very simple. But in case of death of a partner, the death can occur on any day during the year, and therefore that particular partner who has died would have been alive from the beginning of the year, that is on 1st April of the year, till a particular date when he died. So he has been working for the firm for this particular set period. So for this particular period, he is entitled to get a share in the profit or the loss which has been earned or incurred by the business, by the firm. And that is why in case of death of partner, this is an additional computation that you need to learn compared to the retirement of partner. Now, what is important is that there are several options open to the firm. The two options, basic options are one where there is going to be preparation of final accounts. The other one is estimation basis. Now, when we're talking about preparation of final accounts, what are we going to do? In case of a firm which decides that whenever there is a death of a partner, on the date of death, they will close the books of accounts. They'll totally close the books of accounts like it is closed at the end of the year on 31st March. Same way, instead of on 31st March, on the date of death of partner, they will close down the books of accounts and they will prepare the final accounts, find out the actual amount of profit or loss. So actual profit or loss for that period, that is from the 1st April of that year till the date of death, the actual profit or loss would be determined, and then that profit or loss would be divided amongst the partners in their profit sharing ratio. But this involves a lot of work of closing down the books and a lot of inconvenience to the business. So the other basis or the option that they have is the estimation basis, where an estimation is made of the share of profit or loss. Now here, for the estimation purpose, there can be again two bases available which can be adopted. One, estimation on time basis. The other one is on estimation on turnover basis. So we are going to learn in detail about all of these soon. Now, as I told you, for the preparation of final accounts, it is very simple. As on the death of the partner, books of accounts of the firms is closed. So when is it closed? On the date of death of a partner. The books of accounts would be closed. Final accounts, that is your profit and loss account and balance sheet, are going to be prepared. They are going to be prepared, and when final accounts are prepared, what happens? You will get the actual amount of the profit earned, or in case it is a loss, the loss incurred for that period, that is from the beginning of the year till the date of death. So once that is known, simple, that profit earned or the loss incurred will be distributed amongst the partners in the profit sharing ratio. So in case the result is a profit, then the journal entry that would be passed would be profit and loss appropriation account debit. 2. The partner's capital account. So here we are going to distribute amongst all partners individually. Like suppose there are 3 partners, Ajay, Vijay, Sanjay. Then you credit individually to Ajay's capital, to Vijay's capital, to Sanjay's capital in their profit sharing ratio. So in this way, the profit which has been determined would be distributed, as it is normally done in the final accounts of partnership at the end of the year. But if there is a loss incurred, it is just a reverse entry passed, which is we debit the partner's capital account. In case they are following fixed capital system, then the current account is debited or credited, and you credit the profit and loss appropriation account. So in this way, in the profit sharing ratio, the amount of loss, actual loss which has been calculated would be distributed. So this is a journal entry that you would be passing when the firm decides to prepare its final accounts as on the date of death of a partner. And the exact amount gets distributed amongst all the partners by crediting or debiting the capital account respectively for profit or loss in the profit sharing ratio. I hope that is clear. Now let us understand it with an example so that the concept becomes more clear to you. So let us take this case of Anil, Sunil and Nikhil, our partners, sharing profits and loss in the ratio 5:3:2. Sunil died. So he was sharing 3/10 when on 30th September 2021. So he was alive from 1st April 2021 till 30th September 2021. And Nikhil decided to continue the business sharing profits equally. So the rest of the partner Anil and Nikhil decided they will continue the profit. Accounts were prepared till 30th September and the profit for the period was determined to be 10 lakh rupees. So what they did on the date of death, they closed the books of accounts, prepared the profit and loss account balance sheet, and from the profit and loss account they found out for the period from 1st April 2021 to 30th September they had earned a profit of 10 lakh. Then asked you to pass an essay journal entry for distribution profit for the 6 months ended 30th September. So here the profit, actual profit is available. So we just distribute it amongst the partner. When it is a profit, we credit the profit to the partner's capital account. So the journal entry would be passed on 30th of September of 2021. We would debit the profit and loss appropriation account debit. Rupees 10 lakh. And that would be given to the partners, that is to Anil's capital account, to Sunil's capital account, and to Nikhil's capital account. So it would be distributed in the ratio of 5/10, 3/10, 2/10. So it comes to 5 lakhs, 3 lakhs and 2 lakhs respectively. So this is how the profit is distributed in the profit sharing ratio. So this is how when final accounts are prepared, you just pass one journal entry of distributing the exact amount of profit that has been actually earned amongst the partners in the profit sharing ratio by crediting their capital account. In the same case, if it was a loss, we would have debited the capital accounts of partner and credited the profit and loss appropriation account in their profit sharing ratio. I hope the first method is clear to you. Now, let us move on and learn about the estimation method. In estimation, what is done is that they do not close the books of accounts. They adopt a different basis of making estimation. They estimate what could be the profit for that particular period from 1st April of that year till the date of death, and they give it to the deceased partner as a share. So in estimation method also, we have two bases. One, we can use time basis. The other one is a turnover basis. So first let us understand the time basis. So when the firm is going to adopt this basis, basically there is one basic assumption that is made. The assumption is that the profit has been earned uniformly during the year. That is the assumption that is being made. So on this basis of this assumption, we are going to estimate the amount of profit for the period from 1st April till 30th or the date of death of the deceased partner. So how do we do that? We might use the previous year's profit as a basis. So suppose we take that previous year there was a certain amount of profit, and we assume that this year also we would be able to attain at least that much of profit. So we take the previous year's profit as the basis, and with that what we do, we assume that at least we'll be able to earn the same amount of profit, but that profit was for how many months? It was for an entire 12 months period that they were able to earn that profit. But now this is a case where there's a death of a partner. So the partner was alive for a certain number of months in a year. He was not alive entire 12 months of the year. So we would multiply it by the period, which is from 1st of April till the date of death, divided by 12. So we are trying to find out the proportionate period. Suppose he died on 30th September. He was alive from 1st April to 30th September. That comes to 6 months. So we are applying to the entire 12 months profit of previous year, the 6 by 12 to find out for 6 months period what would be the profit. And then to that we apply the share of profit of the deceased partner. So suppose it was an equal partnership and there were 3 partners. The deceased partner share is also 1 by 3. So we'll apply to that particular period profit. The share of the deceased partner is 1 by 3 and get the share of profit that would be of the deceased partner. So this way, using this formula, we would ascertain the share of profit, or if there was a loss, a share of loss of the deceased partner. And very important thing, when we pass the journal entry, assuming that is a profit, I'll give you the journal entry. The journal entry would be, we would be debiting the profit and loss suspense account. We do not use the appropriation account here because this profit amount that we're using as a basis to find out the share of profit of this partner is not the actual profit, it's an estimated amount. So we debit the profit and loss suspense account and we credit the deceased partner's capital account with the amount that we have determined, which we have estimated. So this is when there is a profit. With this amount of profit that we determined using this formula, we put that. So profit share of deceased partner is the amount with which we debit and credit. If there was a loss, reverse entry is passed. We debit the deceased partner's capital account and credit the profit and loss suspense account. That's all. The reverse entry is passed. So let us understand this particular concept with an example so that it becomes clear to you. So look at this particular example. Amit, Sumit and Punit were partners sharing profits and losses in the ratio of 2:2:1. Punit died. So 1 by 5 was the share of Punit and he died. When did he die? On 30th June of 2021. So he was alive from 1st April 2021 till 30th June. April, May, June. He was alive for 3 months in this year. Amit and Sumit decided to continue the business. So they decided they will continue the business. They will not close down. Share of profit of the deceased partner from the beginning of the year till the date of death to be determined on the basis of last year's profit, which was 5 lakhs. So they said estimate on the basis of last year's profit. So the last year's profit which we have is rupees 5 lakh. The period for which he was alive was from 1st of April 2021 to 30th of June 2021, which means he was alive for 3 months. And the profit share of the deceased partner, that is Puneet, who died, was 1/5. These are the basic information that we require. Now putting that in a formula, what would be the share of profit of Puneet for the period he was alive? Simple. You take the previous year's profit, which was for 12 months period, but in this year when we're using the same thing, he was alive only for 3 months. So we apply 3/12 to find out the proportionate for month he was alive. That is for all the partners together. But we are supposed to find out what is Puneet's share. So we apply this 1/5. So when we do this, we get the amount of share of Puneet. That would be rupees 25,000. So this is share of Puneet for the period of 3 months he was alive. And when we pass a journal entry, we debit the profit and loss suspense account, because this is estimated amount, not the actual amount, 25,000, and we credit Puneet's capital account with 25,000. It's a share of profit of deceased partner, which has been credited to his capital account. So this is a journal entry that we would pass, and this is how we estimate when it is on the time basis. I hope it is clear to you. Now let us move on and learn about estimation of turnover basis. So there's one other way where estimation can be made, where we use the turnover as the basis. So what is turnover? Turnover is nothing but the sales which has been made during the year by that particular business. So when we're using this basis, basically you need to understand that normally we use the previous year's details as a basis for the current year. So what are the previous year figures that we're going to use? So previous year's turnover and profit is going to be used, and we are going to establish a relationship between those two. How? We would find out that profit of that previous year by the turnover of that particular year into 100. You'll get the percentage of profit which was earned in the previous year. And then what happens is, current year you would be able to get the turnover. Finding out the turnover for the current year, what we're talking about current year here is from the 1st of April of that year till the date of death. For that period, ascertaining turnover is simple. You just take out the sales book, total all the sales that has been made from the beginning of the year till the date of death of partner, and total it up and you get the total turnover for that particular period. So using that as basis, what we do is we apply this profit percentage on turnover to get the profit for the current year for that particular period. Okay, and to that we apply the share of profit of the deceased partner. So using this way, we find out the share of profit or loss of that deceased partner. So if I give you a formula for this, it would be share of profit would be equivalent to the last year's profit by last year's sales into the sales till date of death of that deceased partner into profit share of the deceased partner. So this is the formula that you can use. Here, instead of finding a percentage, directly last year profit by last year's sale into sale till date of death. To that, you apply the profit share to find out the share of profit of the deceased partner. So let us understand this particular concept using an example. Look at this example. P, Q and R were partners sharing profits and losses ratio 3:2:1. Q died on 30th September. So he was alive for 6 months. Accounts are closed on 31st March of every year. As per that, sales for the year ended 31st March 2021, that is the last year, previous year, was 10 lakh, and the sale for the 6 months ended 30th September 2021, that is from beginning of the year till 30th September, current year, till the date of death of Q, they had turnover or sales of 6 lakh. Now, loss for the year ended 31st March 2021 was 1 lakh. But what happened in the previous year? With the sale of 10 lakh, they had a loss of 1 lakh. So, for you to understand the journal entries, I have given an example with a loss situation. So, calculate deceased partner share of profit or loss till the date of death. Now, we are going to use the basis, the formula for finding out the share of profit of Q. So, what do? We take the profit or loss of the previous year, that is 1 lakh, divided by the sales of the previous year, 10 lakh, and we multiply it with the sales of the current year period till the date of death, which is 6 lakh. To that we multiply the share of the deceased partner Q, which is 2/6. So let's do this. So it comes to rupees 20,000. So now for this, when we pass an entry, this is a share of loss in this case, because previous year also was a loss. So what will we do? We will debit Q's capital account debit to profit and loss suspense account. So 20,000. So this way, we, using the basis of previous year sales and profit, we have determined the share of loss for the current year till the date of death and given it to the deceased partner. So share of loss transferred to Q's capital account. So I hope with this, the estimation basis of using the turnover basis is also clear to you. So with this, I would like to conclude today's session. I hope the different concepts were clear. We would continue with the next part, where I will teach you that in case, how do you pass the journal entries when there are two situations faced by you. One, where the profit sharing ratio amongst the continuing partners does not change, and when it changes. So there's a difference in the way in which you record the journal entries. So that we will learn in detail in the next session. I hope today's session was useful to you. If you found this video useful, please do like and share it. And if you have not yet subscribed to the channel, please do subscribe to the channel so that you get continued notification of all the upcoming videos. Thank you. Have a great day.